Welcome to The Explainer. Today, we are completely decoding the complex maneuvers of strategy, formerly MicroStrategy, to figure out if their stock is currently a generational buy opportunity or, well, an incredibly dangerous risk. Now, if you've been paying any attention to the markets this week, you've definitely seen their ticker popping up in the headlines. But we're looking way past the noise today, because this isn't just a simple Bitcoin story anymore. The fundamental risk profile of this entire company has shifted dramatically, and we need to break it all down. So, let's dive right into this mystery. Over the last 48 hours, Strategy made a move that honestly shocked a lot of onlookers. They raised a massive $2 billion through an ATM offering, but then they completely paused their legendary Bitcoin buying spree. They bought exactly 0 Bitcoin with that new capital. For a company that has famously borrowed hand over fist to aggressively stock crypto at every single opportunity, often acting like a kid in a candy store with an unlimited credit card, sitting on that cash is a stunning pivot. Section 1. The new balance sheet. The mystery of the massive cash pad. To figure this out, we really have to look at the sheer scale of their pivot. Instead of pouring that newly raised capital into more crypto, they've parked funds into a brand new USD liquidity pool worth about $1.59 billion. That single move boosted their main cash reserves and pushed their total liquidity to an unprecedented $6.69 billion. They are now sitting on an absolute mountain of cash. They're ready to pay off debt, fund day-to-day operations, or just maybe perfectly time their next major market entry. And this shift in their financial identity is just brilliant. Look at the numbers. With their total debt sitting right around $6.75 billion, it almost perfectly mirrors that new $6.69 billion in total liquidity. So what does that actually mean? It means their net leverage is now near 0. They have essentially transformed overnight from a highly leveraged, aggressive borrower living right on the edge of market volatility to a cash-rich entity operating with an incredible safety net. So what is the catalyst for this massive change? Well, after enduring a brutal crypto winter, Strategy recorded a significant $8.6 billion net loss in the second quarter. Now, it's absolutely vital to note that this loss was driven entirely by fair value adjustments on their vast crypto holdings, not by operational failures in their actual day-to-day business. But let's be real, an $8.6 billion paper loss is still enough to force a major strategy shift. They are actively playing defense right now, and that drastically changes how we have to value this stock going forward. Section 2. The Bitcoin Leverage Machine. Unpacking the staggering math behind 840,447 BTC. Now, despite this recent pause in purchasing, Strategy still holds an absolutely astonishing 840,447 Bitcoin on their balance sheet. That stash is valued at over $65 billion at current prices, with an average purchase price of $75,385 per coin. Grasping the sheer volume of those over 840,000 coins is literally the key to understanding the mechanics of their stock price and how it behaves from day to day. The math here is just staggering. Because of the immense size of that holding, for every single $1,000 move in the price of Bitcoin, Strategy's portfolio value swings by an unprecedented $840 million. So if Bitcoin rallies by $10,000, which, as we all know, can happen in the blink of an eye in crypto markets, Strategy's portfolio value swings by a vast $8.4 billion. The leverage baked directly into their holdings is just unparalleled. But hey, we can't forget what actually sits beneath all this crypto. Because their core software business is still losing money operationally, they really aren't a traditional tech company in the eyes of the market anymore. When you buy this stock, you are fundamentally buying exactly what this quote describes: a leveraged Bitcoin ETF with a software side gig attached to it. The software business is completely eclipsed by the sheer gravity of that balance sheet. You've got to keep in mind, though, that this leverage works in both directions. On one hand, we have the danger. During crypto downturns like the brutal 65% drop we saw last year, MSTR crashes significantly harder than plain old Bitcoin. But on the flip side, we see the explosive upside. During Bitcoin rallies, this stock can actually outperform plain Bitcoin by a factor of 2 to 1 on the way up. It is a high-octane amplifier of crypto sentiment. Moving on to Section 3, Bull versus Bear Analysts. Contrasting the perspectives and price targets. There is a really fascinating quirk in the analyst coverage right now that perfectly highlights how unique this stock is. Take Canaccord, for example, representing the bulls. They just raised their target to $175 with a firm buy rating, specifically praising this materially brightened setup created by lower debt risk and that vast new cash pile. Then you have Bernstein playing the cautious bear. They're worried about shareholder dilution and a delayed Bitcoin cycle, yet they still maintain an outperform rating and set a surprisingly higher $350 target. Just for some context here, if the stock is hovering around the $100 to $110 mark, Canaccord's conservative target is a 60% upside, while Bernstein's cautious target is a 200% upside. Wall Street is completely split on how to model this thing. What grounds this massive valuation spread and these wild price targets is this specific multiple, 1.04. Strategy is currently trading at just 1.04 times its actual Bitcoin net asset value. This is incredibly important because historically, this stock has commanded substantial premiums, often trading at 2 times or more its actual Bitcoin holdings. So, at a 1.04 multiple, if you believe Bitcoin is heading towards 6 figures, MSTR is essentially trading at a bargain basement price relative to its historical norms.
Section 4. Key risks to consider. A sobering look at the downside.
We definitely can't just look at the upside potential without doing a serious reality check. Before you make any investment decisions, we need to carefully interrogate the severe compounding risks involved with this asset. And the downside risks here are very real and multi-layered. First up is the intense volatility. The stock has a beta of 2.74, meaning it is nearly 3 times more volatile than the S&P 500. And despite recent rallies, one-year returns are still down over 60%. Second is the constant threat of share dilution. They've been issuing new shares to fund these Bitcoin purchases, which directly dilutes existing shareholders, and they could easily resume doing so if prices drop. Third is macro sensitivity. Higher interest rates make their convertible debt much more expensive to refinance. And finally, there's the ever-present threat of sudden regulatory crackdowns on crypto, which could quite literally hammer the stock price overnight. And that brings us to Section 5, the final verdict: fortress balance sheet or highly speculative play.
We really have to decide, is this a newly built fortress balance sheet, or does it remain a highly speculative, incredibly dangerous play on the crypto markets? Let's weigh strategies pivot from reckless gambler to cash-rich defender. While this stock undoubtedly offers incredible asymmetric upside for those with a high-risk tolerance who are deeply bullish on crypto, we have to ask the hard question. Based on the unprecedented leverage, the historical extreme volatility, and the severe multi-layered risks we've uncovered today, is MSTR a buy for you? Or does this sudden defensive hoarding of $6.69 billion in cash signal that even Strategy's legendary management team is quietly preparing for a historic crypto crash? Think carefully about what that cash pile is really waiting for before you make your move.